Bank of Canada dropped its rate again, and Doug Ford's poking the bear. Yeah, all this and more with a good friend and mortgage broker, Mr. Dion Beg, right after this. Here we are, my friends, back with our favorite mortgage broker in all the land, Mr. Dion Beg. How you doing, my man?
Hey, Gary. Good. Another exciting Wednesday for us to have our podcast on.
That's right. There is a reason why we do these on Wednesdays, because typically that's, the rate announcements, the lineup, and you just never know what crazy commercials have come out over the past week.
Well, the thing is, we'll talk about those commercials, but when you say you never know, in this particular instance, I think that if you were a betting man, you'd bet your house on this rate drop today that we saw. So another 0.25% drop, quarter basis point drop, and it's been sort of predicted because of less than stellar economic numbers in Canada, and a little bit more historical stability in the recent weeks regarding our relationship with the United States, which may have been sort of smacked off course by an interesting ad campaign by the Premier of Ontario.
Yeah. If you haven't seen the ad, go out and watch it if you want to, educate and then maybe also entertain yourself, is a fair way to say that. I think it did exactly what it had intended to do, and that was to stir the pot.
Yeah, so for those who may not have watched it, it's basically using a speech that was given by Ronald Reagan, I think back in the 80s, explaining about the downside of tariffs and why tariffs are a bad thing. And Doug Ford decided he'd put that together with some smart edits and some video footage, basically airing it. Was it during the World Series?
It came out just prior to the Blue Jays and LA Dodgers World Series games. And then it aired throughout it, I believe. My take on it, if our friend to the south, if the president had never actually mentioned it, it definitely would not have gotten the airtime that it got. Agreed, or I don't know.
Correct. Yeah. I mean, again, it only got the attention because it poked the bear, the proverbial orange bear.
Yeah.
Down there. Right.
Yeah. Exactly. And obviously from that, we've heard that, hey, all talks with Canada are off. And that was the news coming out of the States after that commercial aired. We never know. We never know exactly where the talks are, whether they're, in alignment or totally off base with each other anyways. And they could very well have been, who knows? It has, obviously created a lot of conversation, and maybe opportunities, elsewhere, as we're kind of learning right now through China and other Asian countries too. So who knows what that really creates? And we know that Mark Carney has said, hey, we cannot rely on the U.S. as much as we have in the past. And that's actually a smart statement to look at, divesting just as any investor would elsewhere, right?
Yeah, again, the whole eggs in one basket idea, right? It never serves anybody really well. But yeah, just back to the interest rate announcement today, Gary. So, guys, a couple of weeks ago, we had said that many of our clients have started to shift towards choosing the variable rate. They had chosen that variable rate with the idea that rates were going to continue to slide down, and they wanted to enjoy that drop in rates as they came through. So I'm happy to say that all of our clients who did choose the variable rate were correct, and have now today, as of tomorrow, they're getting statements from their lenders saying that their rates would drop 0.25%. I pulled a graph from an economist, Dr. Sherry Cooper, who has outlined here the rate drops that have happened. So we can see here we started the year at a Bank of Canada rate of 3%, and now we're down to that 2.25%. And she's predicting that we're likely getting another 0.25% drop on December 10, which is our final Bank of Canada meeting for the year, which would take that overnight policy rate to 2.0%. Okay, if we get there, guys, at 2.0%, That's not the rate at which we get to borrow money at the banks for mortgages. Usually that translates to about 1.5% more. So 2% in December would mean you're able to borrow at close to 3.5% on a variable rate mortgage, which is drastically different, Gary, from just 24 months ago when interest rates were up at around 6.25%, 6.5%. So we're down by 3% from just two years ago.
Well, and this is that other ripple effect too, as this also has a direct effect on your lines of credits and things like that, correct?
Exactly, yeah. So anything that's governed by a variable rate is going to drop accordingly. And I'll just say this, for most of you on regular variable rates, it means that your monthly payment will drop. But for some of you who are on variable rates that have a static payment, your monthly payment will not drop. It's just that the portion of your mortgage payment that goes towards paying down the principal will be greater. So you pay off your home faster. I know that a lot of clients get caught out by that because it wasn't properly explained to them by their institution when they took that mortgage. It's something that we go out of our way to explain to our clients when they take a mortgage. But if you don't see a payment drop on your next statement, it's probably because of that. And if you want any help with that, feel free to reach out.
Yeah, that's important to do. And these are times too, as the rates drop, and if you are in a position where your monthly budgeting is in alignment with what's happening, and you can still afford that extra payment or that monthly payment you were making, we encourage people to keep paying that, because that helps pay down your home or that mortgage balance faster if that works within your budgeting. But these are conversations you should be having with Dion and his team for sure. Dion, there's lots of things and there's lots of noise out there, if you will, in the real estate market and what the government of Canada is doing. And we always say, things change drastically or can change drastically when the government starts making policy changes and different things to our real estate market. There are some good things, there's some bad things, and somewhere in between. Something that you had brought to my attention, because I'd forgot about it, is in Toronto we have the Downsview Airport lands, and what is Toronto going to do with the Downsview Airport lands? And of course, you reminded me, hey, well, there's a big development that's supposed to be happening there, and how is this going to affect Toronto and everything like that? It's over 300 acres worth of property that is obviously underutilized, and a lot of cities will look at the lands that they have that are currently owned and parks, and from everything from parks to warehouse land to make sure that it is having its best and highest use. That may not be today. That might be in 20 or 30 years from now. And of course, that conversation for Downsview Airport lands has come up. Where do you want to take this conversation? Because it's pretty
let's start with what the overall program is called. And I think you might have a link to the website there, Gary.
Yeah.
So everybody knows that Canada doesn't have enough homes. Okay. And we've been talking about it for so long. There's been all these potential proposals of what to do. And Mark Carney has come out and said, you know what? We as the federal government are going to use federal lands to build social housing, right? So we're talking about government housing. So it's quite maybe some people will see this as a drastic move. What I will say is it's probably a little bit overdue, right? We need the easing on the housing market. People complaining about rents or not being able to rent a property that can accommodate their family because they're sick of living in a condominium and they actually need a house. And so this proposal and this program is actually building houses in Toronto in the 416, not out in the boonies, but actually commutable distance to the downtown of Toronto. But it's on federal land and it's social housing for the most part. So they've proposed here 63,000 new homes developed over the next decade or so, which is a significant number of homes. But to be clear, when we hear affordable housing, you and I, Gary, hope that it means that for the younger first-time home buyer, they can then maybe go out and buy homes that will be affordable for them. But that is not the case, and that does not seem to be the priority of the government at this time. the priority is just building cheap homes in which people could rent and potentially rent for many, many years. Okay. Now, I know that this has been the case in many European countries. I have a friend in Switzerland. I went to visit him. He lives in a lovely home. But when I asked him, like, out of your 10 closest friends here, who owns property? The answer is none. None of them do. Okay. But on the flip side, what they do have is they have a very good social safety net. They have very good pension plans, and they're well-funded and well-managed pension plans that mean that in retirement, they can depend on those pensions long-term to live on. Well, let me ask you this question, Gary. Do you know what a regular Canadian pensioner gets in the form of CPP, that's Canadian Pension Plan, plus OAS, Old Age Security? If you combine those two numbers for a regular Canadian, take a guess what that number is.
This is a full-on guess. I don't know.
Take a guess.
$2,500 a month is my guess. That's probably high.
It's a little less than that. It's actually, in most cases, less than $2,000 a month. Okay. And the reason I'm raising this as it relates to, housing ownership is that many Canadians today who might be on government pension can still access wealth or cash from the home that they live in, because they've built up that equity in their home for many, many years. And a concern that I have around basically creating this housing and taking people who could have fought to be property owners but put them on the path of becoming renters and potentially renters for life is, what else is the government going to do to ensure that those people build wealth for their retirement if it's not in the traditional default forced savings that housing has always presented for Canadians? So, the example here would be the blue collar worker who lives in a bungalow in Etobicoke that he bought for $150,000 in 1990, right? Who today is sitting on $1 million home and is probably just on government pension, right? He knows that if he needs to, he can tap into that equity, be it through regular mortgage, reverse mortgage, and or selling the property and downsizing to something smaller, okay? He knows that that's his backup plan. But my concern is, what will the backup plan be for people if they're not going to get into housing? And the idea that, people will automatically then go and invest that money through a financial planner or into the stock market, it's a lovely idea, but because it's not automated and requires action on part of that person, what I've found is that it very rarely happens.
Yeah, I agreed. And it's that forced savings. We're not even aware of it half the time when we're, for those homeowners is what I'm alluding to, obviously. And then as you said, 25, 30 years later, 40 years later, in some cases, you now own a home with mortgage free. And that's the wealth that you're targeting. That's the wealth that you're talking about, in a sense, or that safety net for your future. And there's many different ways to, live off of that if you don't have, retirement funds elsewhere with, reverse mortgages and all sorts of different things, or selling and moving to a cheaper home or a smaller home, downsizing, right sizing, as we all like to say. That is a concern. I like the first concept of it is, okay, that makes sense. We need to create more housing for people as they're coming in, and as our kids are getting, turning into young adults, and where are they going to live and that sort of thing. There's a housing shortage. It's that balancing act, and that's what makes running government so amazingly fun from our perspective. There's so many different questions you have to answer, right?
Yes, and again, like, this is a ripple effect, a knock-on effect, in that if we're saying to people, okay, we think that home ownership is no longer a goal or an attainable goal, and we're going to make housing affordable, it's like, where does the government help stop? Should they then be appointing a financial planner to all of these families and telling them how to invest their money so that they can still have a decent life in retirement? Because I think we can all agree we can't depend on the government pension 40 years from now for those people who are entering government housing.
Yeah, well, we've all learned that even with our parents, in a sense, right now, it's not enough to live off of. as we've alluded to. This is an interesting project, of course, at Downsview and North Crest there, if you wanted to look it up yourself. It is very unique. They're obviously creating a lifestyle there, and we'll watch obviously with some interest to see how that affects the housing market, if you will. I do like the idea of creating a better use for this land here. And creating opportunities for people. On the flip side too is, as we're talking about this, and I'm going to scroll past it, and I'm just going to try and remember what it said about, it's obviously going to create jobs, creating a huge development like this. Of course, creating a place to stay, we know that. But then, once it's built, there's the auxiliary, you need medical, you need, groceries, and you need services and all that type of thing. So it is creating, a localized financial economy. That's the word. Yeah. Thank you. You can tell I was searching for it. Economy for that. So these are all good things. The type
of homes, Gary, the type of homes. We should touch on that. The type of homes they plan on putting on this property, right?
We should, yeah. And you can see the pictures here. You have some low-rise buildings. For the most part, they're also talking about putting in for lack of a better term, prefab homes. And we've talked about this before, and our mind goes to, well, maybe it's that trailer park style or anything like that. My friends, if you've looked up prefab homes in the last 5, even 10 years, you couldn't even tell it was a prefab home. So what happened? A prefab home, if you're not familiar, it's built in a warehouse, in a sense, factory, and shipped to site. And these homes, you can do it on mass production under a controlled environment, which is always important in Canada,
especially in Canada.
Yeah. Exactly. And don't take that. Well, these are going to be less quality. No, they're going to look like a great home. Just know that they can produce them much faster this way under that controlled environment and things like that. So. Anyways, we'll watch this and keep our eye on it. And if you have some insight, we'd love to hear from you as well of what this project could be and looks like. And of course, this will have a ripple effects in the surrounding area and so forth. It's a good thing. It's just what, in a sense, as you said, Dion, is how is the government going to also help our nation and for the people that choose to live in areas like this, help save for their future? And that's the question, right?
Yeah. And look, maybe there's a plan for that I'm not aware of. But every time I've heard this argument of, and even before today, with the argument of you should rent and then invest the difference that you would have otherwise been spending on your mortgage, I've never seen somebody successfully go and invest the difference. That's the challenge.
That's the challenge. We had on my notes here, Dion, we were going to talk about the 3 types of insurance that homeowners can typically purchase or get when they get a new home or a new mortgage. Let's save that for next video. And because I don't want to just skim right through it. That's really important information, especially if you are refinancing or getting a new home, my friend. Remind us how to get a hold of you.
Yeah, at kangamortgage.ca or Instagram at Dion Beg.
There you have it, my friends. That's, of course, Dion Beg. I'm Gary McGowan. We'll see everybody in the next episode. Goodbye for now.